Good morning, everyone, and welcome to the European crossover webinar. We're seeing another quiet August trading day. Euro is really quiet. We did slip into the 30s in the euro. I was looking potentially for a break into the low 20s, maybe even the teens. So I was able to get out of my euro short as we dipped just right at the 30s. I kind of tried to give it a little bit more time. And it seems like I was going to break, and I thought best time just to go and get out. So I actually was able to get out yesterday after as we rolled into Asia. But it's really quiet. Dollar yen made it to that area I was looking for, the 102.02, which was a 61%, and a 197. I figured that'd be a good place. I tweeted that out, a good place for intraday longs to lay off of. And we did, and we fell back to about 75. So very nice opportunity for some of y'all if y'all did go in and take that. We reassert ourselves, and now we're on the highs at 0222. We're actually up at the zone here of 223, that zone of 223 to 285. But we do have U.S. retail sales coming up. And it looks like the market's going to stay quiet until then. Gold, we talked about that in the webinar yesterday about selling it, getting short against the 1358. That's exactly where the market actually fell from. Fell a pretty good chunk. I was trading the crude oil and was messing around with that. That came out okay, but man, what a disaster that crude really tore a lot of people up yesterday. And we've seen the Aussie dollar weaken here. And cable continues to remain under pressure, and overall dollar CAD's worked a little bit higher and doing pretty good overall if you consider how well crude has come. Now crude is starting to slide back again, and we actually got a shooting star on the 8-minute chart a little while ago at 43.78, and we've gone and pulled back about 30 cents. But overall, I mean, dollar CAD could have been a whole heck of a lot weaker when you look at things in perspective, how far crude had come. Philippe says, good morning, Philippe, and Felipe, and so let's go and take a look. So the dollar steadying itself ahead of the retail sales, and there's still some concern. It's with all this trading, you got to be careful. I still think that we're going to see a dollar rally as traders come back from holiday and the Labor Day. So a week after September, I expect the dollar really to start chugging along. Obviously, being doing okay against the dollar yen, and fairly well against the dollar CAD, considering how strong oil is, and the cable continues to remain weak. We did kind of pull back along a little bit from the Aussie dollar, but some firms are still viewing a weaker dollar. I still have concerns on this emerging market, but you know what? They're holding up really well. And again, we looked at this. I think this is important. It also augurs for another higher move in the SPOOs, but it says equity funds attracted $6.5 billion of inflows this week, the first inflows into global stocks in a month, as investors return to U.S. markets and continue to pile into emerging assets. BAML said on Friday. Emerging debt funds extended their bull run, pulling in $1.6 billion in the week to Wednesday, as investors frustrated with zero or negative interest rates on offer in developing government bonds hunted for returns. The swing into the global equities driven by investors moving into exchange-traded funds, where inflows of $10 billion more than offset the $3.5 billion that fled mutual funds. Sentiment is getting more bullish, but not yet at an extreme. BML's global strategy team, led by Michael Hartnett in New York, said in a note to clients. The biggest beneficiaries of the rise in risk appetite were U.S. stocks, which attracted $4.9 billion, the first inflows in 4 weeks. Japan attracted 1.6 billion, the largest inflow since January 16. And emerging equities absorbed 1.3 billion. There's 6 straight weeks of inflows. The U.S. stock market is up almost 7% year to date, hitting record highs again this week. Emerging equities, however, that the surge of 14.5% after 3 years of losses. So they've really had one heck of a rebound. But Japan's Nikkei is down 11% year to date. BML said investors were taking profits in traditional defensive sectors of consumer staples, telecom, utilities, and turning to cyclical plays in more economically sensitive sectors. Financials enjoyed their biggest 4-week inflows in 8 months with 1.2 billion, which tech stocks have seen their largest inflows in 4 months with 500 million. This is all August for the S&P to continue to move higher, folks. Fixed income investors showed a preference for the riskier end of the spectrum over safe haven, low return government bonds. Emerging bond funds have now taken 18 billion over 6 weeks, the largest on record, equivalent to 6% of assets under management, in what BML described as an emerging market meltup. Even markets such as Malaysia, tainted by the 1MD scandal, are pulling cash as interest rates in Britain, Japan, New Zealand, and Australia as they fall. High-yield bond funds attracted 1.7 billion. Investment-grade bond funds pulled in with 5.3 billion. Government treasury funds suffered 800 million in outflows, racking up 5 straight weeks of redemptions. Investors also dumped money market funds, withdrawing 3.6 billion, the largest outflows in 7 weeks. So, you know, it just augurs for another move. And like I was saying over the last week or so, we can still move higher. Like I told you, I think over the next, I said that last week, I think over the or earlier this week to Blake, I think over the next, I'd say 16 months, we can still move 200 handles in the S&Ps, but we are overextended. I think if we get this move around to 20, like we'll probably get over 2,200, and then we're going to have to start to pull back. We'll see what happens, but I think that we'll start to pull back the first part of September. Let's take a look at what's going on here. And you know I'm not late to the party. For some people that are new listeners, hey, I've been calling for all-time highs in the S&Ps since the spring. And I've been bullish the overall U.S. economy now close to 2 years. So this I'm not Johnny come lately. So as we come into retail sales, we're looking for 0.2. The prior was 0.7. Actually, no, we're looking for 0.4 with the prior 0.6. There's a chance for an upside surprise here. I mean, everything looks good overall. I think the market would pretty much ignore it if it came in a little bit weaker. There would be that concern. I think the dollar would be hurt if it came in a little bit weaker. But we'll have to see how this goes and plays out. Still thin trading overall. I wouldn't say necessarily thin, but just no volatility whatsoever for the most part in FX. So it's made it a little bit tougher. But obviously, a weaker retail sales would certainly hurt the buck. But I think we can get a little bit of a surprise up here, maybe a little bit of an upside surprise. We'll have to see how that plays out. Later on, we have University of Michigan preliminary numbers. They're looking for 91.50 on the Reuters poll. Conditions 109. That's probably in line, just right. Maybe even a little bit better on the conditions. Expectations a little bit stronger. So let's go and move into the chart. You can see the dollar yen here continue to push higher. We talked yesterday about the significance, well, I don't know if it was here, I think it was in the chat room, about the significance of 134. I think I might have mentioned it here. And we're above it, and we slipped below it, but we didn't close below it. And we're able to defend this area here. And from there, we've launched up very nicely. I was looking for this area in the, once we got here towards the end of the session, for them to go and pull back up against. Right there. And that's where the market ran out of gas. And we saw a very nice pullback to 77, which is a prior key level. I generally don't trade Asia, but this was a very good opportunity for some of you. And like I said, I think it was trading at 192 when I stated, hey, look, looking for intraday longs to lay off here between 197 and 202, which is a 61%. I think they may have ended up to 208. We saw a nice, very nice pullback, and now the market's reasserted itself, and we're into the zone here. Obviously, it looks like we're going to make a run overall for this 261 and see if we can get above it. That seems to be where they want to go. I mean, we can ease back a bit, but it looks overall this is where they're going to want to go. It says 38%. We'll probably battle here. Probably even a little bit higher. And if we can get a 2-hour close of about 223, let's see, hang on. Just a moment. So anyway, I think that if we can get a 2-hour close above this 223, that'll probably open the door for this price up here, which would be, hang on, let's take a look at this. Right there, 311. And I'm saying in the overall bigger scheme, if we can get a 2-hour close, be honest, I'm looking at this low here. So a 2-hour close above 227. Notice how they ran out of gas right there. Look at that. Watch that. See this low here? Right there? Look at that. 227 to the pair. If they can get a 2-hour close above 227, I believe that opens the door overall for a move here, which is going to be this price right there, 311. We'll have to see things play out because it's quiet summer trading. Let me see. Sam says, hey, Paulie, I just joined. Is it possible to please take a look at cable if you've already covered it? Yeah, we haven't covered cable yet. We'll take a look at it right now then, Sam. No problem. Hang on. Hang on one moment. One moment. Okay, so anyway, let's go and move into cables, putting some notes in here. Sorry about that. Now, the take is, Morgan Stanley's looking at, and they just think that, and they're pretty good, that the pound still hasn't adjusted to what the levels are. So they're suggesting we still have more room to go. Now, this 29.47, and once again, these levels have been in place for quite a while. I just didn't come up with 29.47 yesterday. It was already in place. This is my touches with all this good volume. And I said, hey, look, it's coming into that. I thought it was pretty good when we defended it, and we came back up here. We've come back down, and we're holding it again. I think at this point, it just looks like the market can't get any oomph off of this bottom, and you're coming into a Friday. The only thing that's going to save the cable is if we get a poor U.S. retail sales report. That's the only thing that's going to, and it might only be a temporary move too. So it looks like we're going to have to probably work lower. So let's try and take a look at where we are here. It looks like they're going to have to test that lower side. And that's the 78%. I tell you what, if it loses this, it just may be Katie bar the door. I tell you what, the cable loves the 78%. I tell you what, it doesn't look good at all. I said yesterday I just didn't see anything here in the cable, but that it looked, you know, like it was kind of overdone at this point. And it does, but I tell you what, I think here's what could happen with the cable. And I would not recommend trading this thing. And you need to be wary of this. They do this all the time. What could happen here in the cable is we do this. We blow the stops. I've seen them do this so many times. And we come back into the range. We kind of sit here in the range. And people say, okay, we blew the stops. And then they start to work hard to see what they can come up with. I've seen them do it so many times, it's not even funny. I mean, here's a perfect example here. Look. See that in here? Look. There we go. Beautiful. We blow the stops. There wasn't no follow through. We come back in here. We went like this, and then went like this to rebalance. See? The exact same freaking thing I just showed you. You see? You blow the stops. You see? We come back into the range. You go sideways for a bit. They figure, you know what? It is pretty oversold. Then we come back to rebalance. You see? And then they fell back. Then they, whatever, they're trying to higher. They freaking do it all the time. So, I mean, I think over time cable can work lower, although I think it's really overdone right now. But I think that next leg lower, trying to ask for that next leg lower in August trading might be a big tall order. I think. So my play would be, I think the risk is that we drop back in here, we test the stops, there's no fall through, we come right back into the range. Just like this. You see, although this was more spread out, but look, you see, hold, we blow the stops, no follow through, we come back into the range, we go sideways, you see, blow the stops, back into the range, sideways, we work higher. And I wasn't even looking at that. I've just seen this happen so many times in cable. But that's a take on cable. But you know, anybody that's long cable, they're chewing on their nails right now. I'll tell you that right now. Let's see. Jack wanted to look at Swissy. Yeah, here's a Swissy. And you know, I haven't looked at this thing, I told you before, in a long time. But the reason I look at it, because it seems to call the euro really well. And so, and it loves the 61%. Check this out. I think this was, I forgot what this number was here. But anyway, here's the 61%. We were looking at that, and we were looking at this level, and ran out of gas. Well, look where the hell it ran out of gas yesterday, the 61% and a beautiful hammer bottom. I think while we're in August, it's a mixed bag. I just don't see currencies making a big play jumping out of ranges while we're in August. I just don't see it. So I think we'll kind of floundering here, could be a little back and fill, push back up a little bit, but overall it's doing well. I tell you what, people don't talk about it anymore, but they used to. The play between gold and the Swissy. And let's take a look at gold and compare it to the Swissy, which I think is also key for the Aussie on a daily chart. You see that? Basically kind of like a shooting star came into our range there at 63 I talked about. And then we got a fully engulfing bar here, which is what knocked us down yesterday. And here we are. To me, that augurs for the dollar Swiss to hold up overall. People haven't talked about the gold and Swiss since Moses crossed the desert. Seriously. It may sound like a tired old joke, but I tell you what, I haven't heard talks about the gold. Although I haven't really paid much attention to Swissy in a long, long time. But I started paying attention to it because it seems to call very good turns with the dollar, especially with the euro dollar. That's why I've started tracking it very closely. Not super closely, but I keep a pretty good eye on it. I would like the Swissy on any pullbacks. And I hang my hat, forget the dollar, I hang my hat on the gold market. And the idea that the gold market's topping. And with that, I think that the dollar Swiss will have a nice underlying bid. If you think about it, I mean, gold's always used to be tied closely to the Swissy, and then on top of that, the gold and the dollar usually run as contraplays. Montes, I hope I'm not messing up your name. Oh, it says on cable. Keep this chart so we can look at it next week. Good point, Montes. I mean, we'll see. Jack says your thoughts on the loonie and subsequently oil if you've got time. I don't look at the Kiwi. I never do. Sam says, haha, I'm long here and you're right. Chewing on my nails. Well, Sam, I would say give that stop a little bit of room. Because, like we showed here, so many times it does this monkey business where it comes down here, messes everybody up, and then comes back in the range. I just don't see a new leg down for the cable into August. In the smack dab middle of August, I just don't see it. So they may try and jerk you out with a little stop run, but I just don't see it. Well, it's time for break. I'll be doggone, it sure is. So it's time for break, and I will catch y'all back in just a little bit. Oh, I'm sorry, Eric. I don't know what I was thinking. Yeah, the Kiwi. The loonie is a cat. I don't know what I was thinking. Thanks, Eric just said that. Yeah, we'll take a look at the loonie. I just had Kiwi on my head, or on my brain. Okay, buddy. Welcome back to the European crossover webinar. You can see here that the dollar-yen stopped right here to the pip against this 227. Right there. That's where it stopped. Seeing the euro dollar come back a little bit, for those that missed it, at the beginning of the webinar, I was able to go and get out of my euro short, the last of it, in the Asian session as we dipped in the 30s. Someone had asked me yesterday in the chat room where I thought we'd go, and I said, yeah, I think, well, yesterday we were talking about possibly the low 20s and maybe into the teens. But they were asking me yesterday because they were still short, and I said, I would get out on the move down into the very low 30s. Just get. Well, I didn't hang on to this extent here, but I did get out okay. I think it was right around 37. I think it was. I think it was 37. But I was looking for maybe one yank down, and we just didn't get it. And I was like, I'm just gonna. I actually gave it a little bit more time than I wanted to give it. I was going to get out as soon as dollar yen hit 0202 because this is where I said we'd run out of gas, and the market was, the high was 05, and we sold off almost 30 pips from there. But I tried to get a little bit more room, so I waited till Asia, and then finally I was like, I'm going to get the hell out of Dodge on this thing. I think it was 37 or 38. I don't remember right offhand. but we're not moving a whole lot higher. But I think that the euro can drift a little bit. Well, we'll have to see what the retail sales does. But all things being equal, and they really won't be equal because we get the retail sales going to impact it one way or the other. We can come back in here, and I think that they'll kind of run out of gas. The same thing you have to consider is that we're trading August trading, just like I was talking about the cable. I just, technically it looks like we'd have to go in and break down. Because they've sat here, and I think it would just be a stop run, and then we would just come right back into the range and go like this, and then work higher. I just don't see a new leg up, or in this case with the euro, or a leg down, a new leg down in August trading. I think they can gun some stops here. I just don't really see it. The euro, we're going to have to see it sustain and move above 69 in order to get some momentum up. That's another one. I just don't really see it. I think it could, maybe on a bad retail sales, we've gone this area. And just like Blake said, anything in the 12s, I'd be shorting it. But for right now, I'm glad to be out of it. On a good, strong retail sales, we can see the teens. I just think that it's just a hard call then. I mean, you could say, okay, I think we're going to have great retail sales. It gets short and it drops into the 20s, low 20s, and you could cover. But the thing is just like when I had the euro short, you're having to sit here and ride that doggone thing for a long time. Is it really worth it? Now, once again, in the longer outlook, and I think the dollar is strengthening, yeah, you can say, well, which I did. I'll just hang on to it. But I didn't like it when I was down. Sam says, listening to you yesterday, your point seems rational that September the dollar will roar, but till then, I think the dollar may soften in order to buy into it. That's what I prefer, staying on the shorter side of it. That's a very good point by Sam. A very good point. I don't think it's so much dollar bearish, although Morgan Stanley is, because I just don't see any big moves as we're in August. So we could, we already had the big move in the euro from FOMC. You see, we broke up here. So all we've done is we've come back in here. Now, I did say that next week I could see a break to newer lows. So that would be, that's a little bit different. We'll have to see how this, if we get a good retail sales, I think we can go and see that break. And what could happen is, which I think can happen on a good retail sales, I think that we can start to break next week, and we come down here, we come back up to the 11, and then before we're already into September, the market's kind of like starting to work low, and then as we get into the second week of September, the market really starts breaking down. But it's going to have to take a catalyst to knock us out of this area. On a good retail sales, I think by next week we can be into the 1040s on a very good retail sales. But once again, we are into August. It's hard to go in and break out of these ranges. And, Sam's right, at least for right now, the flows are working against the dollar. And I read you this stuff about the emerging markets. We've seen a lot of flows continue to go into the emerging markets. So that goes against the dollar. We'll go and take a look at the CAD. CAD's held up really well, dollar CAD, when you look at where the oil's been. I still like this 29.55, which is where they almost went to, which is down just a hair. Obviously, if we get an extended move in crude, I think crude's all over the place right now. I was talking to some people in the chat room. Some people said they're just not going to trade it until maybe next week. And I think this move in crude has really knocked a lot of people, has knocked a few people out of the box, but I think it's really turned people off to crude for a while. I think crude's going to be dead money for about the next, I could be wrong, I think crude's going to be dead money for about the next week to 10 days. I think people, what you saw yesterday, ultimately I ended up making money. I ended up wasting time where I had a beautiful call on the gold, had someone ask me in the chat room, isn't this your area to sell gold? I go, yeah, it is. And the guy shorted it, and I said the guy was up $7. Actually, the guy ultimately ended up being something like, what, $16 on the trade? And then I was dickering around with the crude oil market. I think people, I don't want to say because I ended up missing the gold trade because I was so busy trying to trade crude. I think people are done with crude for a while. I really do. You might see it move around and things like that, but I saw some people saying, I'm just not going to touch it. I'm not going to touch it. And right now, it's worse than Las Vegas. One day it's going, I mean, it's kind of getting back to where it was, but now it's even more volatile. One day it's going up, then the next day it's going down like crazy, then followed by the next day going up and taking everybody out. And I just think the people are fed up with it at this point. I really think the people are just going to say, no more, that's it, finito, I'm done. Maybe I'll come back in September. That's why I think for now, it's dead money. You know, you might look at the volatility and say, oh, no, I don't think so. You know, you think what you want, but I saw some people there saying, well, you know what, I'm not going to touch it. I might touch it next week, but I'm not going to. And a good point. I mean, it's all over the place, and we're in August trading, so it's thin. And, I mean, that's fine if it's thin, but it's just going crazy. And it's a one-way train. One-way train on the way down and a one-way train on the way up. I mean, so, you know, in all likelihood, I won't be touching. I should have been playing around with the gold. And I would have made a big chunk of change off the gold. Matter of fact, from what I said to short it yesterday, at 13.58, I'm looking at it right now, we fell $17. And then I was dicking around with the gold. And it's not like as if, well, the gold was really quiet, it should have done this. Gold really ripped a lot of people's rear ends off. And I think it's dead money now. I think people are like, you know, I'm not even going to touch this thing till September. And then I bet in September it's going to come back and be trading kind of normal stuff. I think people are just fed up with crude oil at this point. I ended up making money, but I'll tell you what, I should have wasted a whole heck of a lot of time on that thing instead of trading gold. And that was a very dumb move. At least I'm glad that one guy, he took the trade and he made a big old chunk of change. Tell you what, he was happy as hell. And that guy trades a pretty decent size, I tell you. He was very happy. In fact, by that time, gold was only trading, I think gold was off like $10 at the time. Ultimately, it ended up going down $17. But with this dollar CAD, I like this area. We could maybe hit the stops and goose them here, but I think this whole area is going to be good. When you look at the overall play of the dollar, and what I'm talking about is with rates, and I think that the dollar is going to strengthen, and BOC will probably ultimately end up cutting. I think this area on a scare down to 29.32, I'm a buyer. Anywhere down here, I'm a buyer here. For a bigger, longer term move that'll probably ultimately end up eclipsing this high of 32.56. Pedro says, where do we resell gold? I'm going to have to take a look at that. He said he did cover his futures, but he's still short the calls in gold. Yeah, I mean, I think that whole scenario that, you know, even though I'm a day trader scalper, I look at the overall scenario because that, you know, saying, here I am a day trader scalper, and I was showing y'all what I believe, and I've been saying that all week, is a double top on the daily here. My first area to get short was 1363, and yesterday was 1358. Look at that high, 1359.50. So, but I think eventually we'll get down to 1310. And then I think eventually, well, we'll end up breaking and probably find support at 1263. We'll bounce again. And ultimately, I think we're going to 1250. We may overshoot it to 1239 here, the other bias pivot. But 1250 is at 38% of the move, which I think also is impacting the Aussie. Now, you remember my call on Aussie this week. I said we're going to 77.50. How do you like that call? Saw people shorting the Aussie here. I said they were wrong. Because you've got a 2-hour close above the prior month's high. And from a price structure standpoint, that augured for higher prices, and my call is this 77.50 to 77.66 area, and boom. Nobody nailed that better than me. And y'all all know that. Now, look where we're finding trouble at. The breakout. So, 76.77. Now, if we get a 2-hour close, of course they closed right here, and then they kind of jumped right back above it. If we get a 2-hour close right now, I'm saying over the course of the next few days, whether it's right today or whenever, below 76.77, it's over for the Aussie. It's actually over for the Aussie. Oh. We will be heading lower. The top is in, as far as I'm concerned. If we get a 2-hour close with 76.77, the top is in Aussie. Could we jump back up into this range? Yeah, but it's over in Aussie. The same way I called for us to move higher, and I said it here on the webinar, when we got this 2-hour close above 76.77, that we were going to move higher. Because even if some people were trying to sell against 77, look, the close above the prior month's close, the 2-hour close above the prior month's high, was going to augur to push us higher. The 2-hour close below that will now negate that. It doesn't mean it's in a bear market, but it's going to negate this upside move. And since we've already come this far, and we came into this range, then any moves here are all going to be shorted. I think the next key, 76.50 is going to be interesting, but the next key number is going to be the 76.30, the 38%. And I think gold weakening here is it's having its impact in the Aussie dollar. I've always liked looking at gold when I looked at the Aussie dollar. And gold appears to be putting in a double top on the daily chart and augurs to me for much lower prices. I'm expecting essentially a $100 move from here before it's all said and done with in gold. And I said that this week before we even got to 1363. Well, I said we're going to overall, I believe it's going to be 1250 before it's all said and done with. And we'll probably overshoot a little bit. Cable's still holding up overall, and right now at the top of the hour we'll have a little bit of a hammer bottom, and we took out the previous low. We didn't take out this low, but we've taken this low here. You see here? That's our 2-hour chart. See that? it doesn't look good the way it's been, but I just don't see a new leg down in summer trading. I mean, in August. Not so much summer trading, but in August, I just don't see a new leg down. Doesn't mean we can't dip lower and try and test the stocks, but certainly doesn't look it now with this hammer bottom. So that's about it. Blake will be coming on in just a few minutes. Frederick says, Paul, is your gold lower call based on a strong dollar? It actually has nothing to do with the dollar, which is a good thing, because you could say, oh, no, I think you're wrong on the dollar. It has nothing to do with the dollar. My take is, we'll take a look at it on a daily chart. We've had a pretty good run from this 1045, right? And so I look at technicals, but I look at the overall theme. So we had a pretty good run to this 1380, and that was a 38% of 1044 to 1924, the outright high, the most recent significant high, which is almost at 2000, and we sold off from there. And this is on a daily chart. It's not like it's a 2-hour or 30-minute chart. So it came back, and it came down to the 1312.50. I thought we were actually going to break sub 12, but we didn't. I mean sub 13, and then find support. And we made another ramp up higher, because there's been all kinds of concerns as, hey, look, will they do, what will the Fed do, blah, 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 the dollar's weaker, blah, 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 and all this stuff. So we had the next NFP report, and we're coming in, we're really doing really well. I told y'all, I said that, I go, we're languishing here, we need a 2-hour close above 48.70 to open up the gates to higher. And we ended up getting that, and we took off. And we came into NFP, and I said, hey, look, if we get a weaker NFP, I don't think we're going to, but if we do, the next target's 1403. And from there, we could get going to 1425. So the gold bulls, you got to give it to them in the sense that they've, held us up really well. But when we got that good NFP, and there's still an outside possibility that we'll raise before the end of December, it took a lot of steam. And I think it's because the bulls are now very disappointed. And they just keep coming up short. And I saw an analyst, I read that yesterday, who's been bullish on gold. And he says, that's it. In the story, we're going lower. Now here, Blake.
Hey.
Hey.
Hey. What's going on?
Nothing. The only thing that pisses me off is